All right, thank you, and welcome to today's profound conversation. Today's profound conversation is towards profound social, political economics, a new vision of equity and inclusion in the development of capital markets, investments, and wealth building post COVID-19 pandemic. So that's a mouthful, but that's what we're going to talk about today. And I normally try to start with a quote. And when I thought about today's session, the quote that came to mind for me is a quote by Helen Keller. And the quote is, "The only thing worse than being blind is having sight and no vision." The only thing worse than being blind is having sight and no vision. So today, we're going to be talking to two of our profound conversationalists, and we're going to start talking about some vision for the future as it relates to economics. And so today we have with us two profound conversationalists, Jameel Johnson and Yaya Fanusie. Fanusie, am I pronouncing it right?
Fanusie.
Yaya Fanusie. And I will ask the two of them to actually tell you a little bit about what they do. And I'm going to request that we do a little bit of education because we want to make sure everybody's on the same page and everybody understands some of the terminology that's being used. So, Jameel, I know that you work for NASDAQ. Can you just tell us a little bit about what NASDAQ is and what you do?
Well, I was really introducing this more as I do policy work for a New York fintech company.
Okay.
But NASDAQ is an exchange. But I'm not really here to discuss NASDAQ, just to be clear. Represent NASDAQ. I'm really concerned about the overall economic issues related to our community, how it's being affected now, and how we need to develop it in the future. But my background expertise tends to be more in financial services policy and issues related to things like access to capital, small business development, and ultimately how resources are distributed. You want to talk about the capital markets in general. What are the capital markets about? The capital markets are really about taking available capital and distributing it to those who can utilize it, hopefully most efficiently, toward production. And production ultimately leading to job creation, goods and services that are needed within the economy that people are willing to pay for. So that's really what the capital markets is about. It's about the distribution of capital where it can be put to its most efficient use. But because of policy issues, throughout the country's history, existing policy issues, it's almost like if you take all the possible distribution channels for capital, it's like cutting some of them off. It's like what a dam does, right? Water wants to flow to its natural, areas, but then if you put a dam there, a lot more water goes in one direction and it's cut off from another direction. So when you look at this country's history, what you're looking at is taking what should be that most efficient use of capital and you're damming it up to cut off some areas and redirecting it to other areas. So the question I think for us is, how do we break up those dams so that capital can flow in our direction for our efficient use and productivity?
All right. Yaya, you have a really interesting background. And I don't know if our participants today got a chance to look at your background, but I know that you used to work with the CIA, and you are currently with the Center for New American Security, and you also have a company that you founded with cryptocurrency, AML, and that's for anti-money laundering strategies. Okay. So why don't you tell us a little bit about what you do and let us know a little bit about what cryptocurrency is and what CNAS does.
Sure. Thank you all for inviting me. So I'm a researcher and I'm a consultant. My background, I guess you could sum it up by saying that I help companies in my consulting work. I help financial institutions and technology companies assess risks when it comes to dealing with financial technology. So risks usually economic risks, but my specialty is anti-money laundering risks. So my background, as you said, I worked in government. I worked in the intelligence community for several years, and in that capacity, it was my job to assess risks and to provide policymakers insights and analysis on national security risks. And so I focused a lot on counterterrorism. I focused at one point also on economic threats to the United States, and it was sort of through that lens that I've had. It's through that lens that I speak to policymakers. So when it comes to what we're dealing with today, I guess you could say that my angle is the need for pushing the need for us to assess the risks to our economy, to identify scenarios, to identify ways in which we may be vulnerable, and on a community level, figuring out ways for us to address or deal with or prepare for this new economic situation. How do we deal with these new vulnerabilities? How do we deal with these new risks? And at the Center for a New American Security, that's a think tank in Washington, D.C. that focuses on national security issues, but I'm part of their economic, energy, and security group. So I deal with, again, economic issues, sort of the nexus between economic security and national security.
Okay. Now, Jameel, you talked about reflowing capital. And now we know that in this post-pandemic world, we're probably going to be looking at a lot more online transactions. And I'm assuming we're going to see that as well as it relates to financial transactions. And Yaya, when I look at a lot of what you do, I know you also focus in on where are some of those risks with respect to those financial transactions that we might start to see online. So if you were to have a conversation with Jameel about kind of what we can look for as this reflow of capital in an online world, what is it that he would have to look out for?
Oh, so if I'm talking, so this is.
What do I need? Yeah. What do I need?
Well, I'm pretty sure that Jameel is on top of it, but if I were to talk to him, I would say some things that I'm sure he's aware of, right? That as you mentioned, more online traffic, more people at home, more people doing digital transactions. The way I look at it is that, in a sense, that's a bigger target area. If we're thinking about, I look at illicit actors. I look at folks that are trying to exploit our good work, our good business, good transactions. And since we have more people staying in their homes, not doing face-to-face business transactions, doing more online, we can see this in so many ways. And I'm sure that it's impacting financial technology companies, investment companies, because now more of their users are in the digital environment. So it probably would mean that there's going to have to be a greater focus on cybersecurity, and not just for the big companies, but for everyday people. In fact, one of the things that I would say is that now I think everyday people, folks like you and me, people in the community, are actually going to have to be more aware of operational security. To use a security term, we call it OPSEC. Meaning that, the big government institutions, the big companies, they're aware of their security when they're doing business, when they're doing transactions. There's sort of cybersecurity or cyber hygiene, those types of things. Now, everyday people are going to have to do that because we're having these conversations, these profound conversations digitally. Are we protected? Are there people who could be exploiting our conversation? People could be doing stealing economic secrets, identity protection. These are things that are going to become more important as we deal with more digital transactions.
What do you have to say to that, Jameel?
Well, I mean, one, he's 100% completely right, because here's an issue. If you look at, I'm sure, the history of the world, but if you look at, let's say, American history in the last 100 or so years, every major crisis ultimately leads to change. You have the market crash of 29. That created the 33 and 34 Acts, which said that if companies wanted to raise money from the public, they had to register. It created the Securities and Exchange Commission. It created the requirement to register your securities and the kind of transparency you had to have as a company now, as well as it created things like the FDIC and so on and so forth to help deal with the banking issue. Bringing us more up to date, more recent crisis, you have something like Hurricane Sandy. Hurricane Sandy basically shut down downtown and shut down Wall Street for 2 days. And the reason it shut down Wall Street for 2 days was because even though certain players were able to operate remotely, other players were not. If they couldn't get to their offices, they couldn't function. One of the benefits of it, though, was that other companies became more resilient and were like, hey, we can function from anywhere now. But what that also means, and this goes to what Yaya is saying about more people working from home, because what's going to happen is not even, let's say, for instance, that you found a cure, both a cure and a vaccine within the next 6 months for COVID-19. And it was going to work for the next, 3 new viruses that came about. This has shown companies where they can be more efficient, decrease their real estate costs. And also there's going to be a mindset of people of, we can also decrease the opportunity to spread potential diseases by simply not interacting all the time every day the way that we do. We'll interact when we want to, not because we always need to. But that means, and what I'm seeing, even myself and other people are seeing, is what kind of setups do companies have for their employees at home? So they're going to invest more to have you in place and operating functionally. So what's going to happen is you're going to be doing like so many more things online, and you're going to be doing, you're not going to, and if you're at home more, what do you do less? You're going to go to the bank less, right? Because I'm already home. I often sometimes will go to the bank when I'm at work and say, hey, I'm going to take a few minutes, run down to the bank, do a transaction. That bank is nowhere near me now. So I end up having to make sure that my security at home has to be greater, because who's also looking at this, and this is something Yaya looks at from his side, is that the cyber criminals are looking at it more. They're also aware of the trends, and they're aware of how people are going to be utilizing online services more and more, how they're going to be ordering more and more, and how can they exploit those issues. But taking it back to our community, one of the things that we end up dealing with, and you talk about in an online world, is the fact that so many of our business services are small because we're economically still on, the lower levels, so to speak. So a lot of our businesses tend to be more retail and service than, say, industrial and manufacturing. So in a case like this, where people aren't going out to the stores, in some cases, the government has insisted that the stores be closed, what's their alternative? And I think what we found is that many of them could have had, or maybe weren't aware of it or couldn't afford the infrastructure to have more of an online presence, even if they had a retail store, have an online presence to be able to say, even though you can't come into my store, I can still service you. I have a whole online community that I can still deal with, so I still have some ways of access. Just to give you an example of a bigger facility, we know, for instance, that Modell's is going out of business. They've been in business for 100 and some odd years, right? I think the great-grandfather started the company. They're going out of business. It has nothing to do with COVID-19. They're already going out of business. The great-grandson, who's running the company now, whose name I don't remember, said that part of the issue was that the New York teams aren't doing as well, so people basically aren't coming in to buy paraphernalia. But there was a response to that where somebody said, that's not the reason. The issue is you never adjusted to an online world, so you're only expecting people to come into the store. And when they're not coming into the store, you're in trouble. If you look at certain stores now, Best Buy, whose stock price is going back up, Dick's Sporting Goods, yeah, their stores are closed too, but they're constantly shipping out. Get it online, we'll ship it to you right away, and so on and so forth. So as even our small businesses have to develop this online sophistication. And of course, that also means, as Yaya brought up, the issue of being secure in the
Now,
transaction
I do know
both
that
ways.
setting up security protocols can be very involved and also can get to be a cost that a lot of small businesses may have trouble dealing with. I know when you're looking at setting up security protocols and compliance protocols, it can be a very expensive process. So is there something that, Yaya, is there something that when we look at small businesses, is there some resources that those small businesses can go to be able to put in place some of the security protocols that maybe some of the larger businesses have because they have the capital and the infrastructure to be able to set that up?
Well, I might just be able to say a little on this because my specialty is not necessarily cybersecurity, but so if Jameel, feel free to step in if you have better insight on this. So I don't deal as much with the sort of cyber infrastructure, but I do know that there are certain standards. Probably what small businesses can do is take a hint from the bigger businesses that actually have to follow or tend to follow specific security standards. There are a couple of security standards out there, and actually I don't want to get the acronyms incorrect, but if you look sort of cybersecurity standards in the financial sector, there are international standards that cybersecurity companies have to follow. And I think, if I am not mistaken, I believe one of the regulators known as FINRA, F-I-N-R-A, which Jameel would be very familiar with, actually has a guide online for cybersecurity. So that might be a resource that people could look to, because you're right, most time the big companies, they have whole cybersecurity departments.
Right.
The smaller companies, which tend to be more vulnerable, don't have that. So they should probably look at some of these resources.
Interesting point, FINRA, as you bring them up, which is the Financial Regulatory Authority, which is basically the regulator which is the private regulator, an SRO, so a self-regulated organization for broker-dealers, used to be the National Association of Securities Dealers, who created the National Association of Securities Dealers Automated Quotes. And I'll let you figure out what that acronym now stands for.
Very good.
All right. And even now, the cybersecurity is one thing, but Yaya, you also focus on some of the potential fraud issues, correct?
Yeah. I'm sorry, I don't want to.
No, go ahead. So
I wanted to, I'll jump in. So the fraud issues, but I wonder if I could sort of bring up, because we're talking about threats and risks, but one of the things that I think that it's important to identify are opportunities, because, I think we are seeing a lot of these threats. But if I could actually offer another way to look at this, is that in this new environment, there are obviously going to be shifts, and we're talking about them, more online transactions. There are going to be challenges that we've seen with social distancing. But another way to think about this is that there also are going to be maybe new sectors that open up or that expand. So if we go from the online transactions, the social distancing is actually limiting some of a lot of the entertainment activity that we had, amusement parks. One thing to think about is the need for more digital content, the need for more digital media. A couple of things to throw out there. In the first few weeks of the shelter in place back in March, I think Verizon had noted that online gaming had increased by, 75% or something in just a couple of weeks. Well, obviously, more people are using are online. Netflix reported a huge spike in its new subscribers, right? So what does this mean? This means if we're thinking about businesses that maybe are going to see constraints, for those that are entrepreneurs that are out there, what are going to be the areas that might open up? I would say digital media content, particularly content that could be scripted. There's a lot of talk about more animation, because it's going to be even difficult for Hollywood right now to be producing what it produces with scripted shows and even non-scripted shows. But animation is something that you can, Animation is something that you can do in a socially distant, right? All types of digital content, the things that we're doing. So for me, that shows that there may be an opportunity for businesses that get into digital content, media content, skills. Let's think about skill set. This webinar is being put together, and there are hosts and co-hosts administering it. Back in the day, if you were working an office job, you would have to put, Microsoft Word and PowerPoint and Access and all. I'm sure that in the next few months, a lot of jobs are going to be looking for people who know how to administer webinars, who know how to run a Zoom call and do all the things with the participants, et cetera. So I'll stop there to say that we should be thinking about some of these challenges that are going to be ahead in this new economy, but we should also be thinking about what areas may open up. Where do we need to maybe shift so that we can benefit in this new pandemic environment?
So where do we see a shift in terms of capital flow?
I assume you're asking me that?
I'm asking you.
Well, it's like I was saying earlier on. Capital tries to flow to places of greater efficiency. So what will happen is the capital flow will go to these areas that Yaya just mentioned, because they're going to see this is where the growth is. Just interestingly enough, I was on the phone the other day with the deputy chief of staff for an elected official, and she was talking about how we have each downloaded all these various platforms because everybody we talk to, like Zoom has obviously gotten the most attention. But now you've got Microsoft Teams. You've got something I just heard, I just used for the first time the night before last, StreamYard. Which really kind of considers itself like a broadcast studio online. And of course, you've got Google something and other. Google always has something. But the capital is going to flow to those areas where you can service people without necessarily having bricks and mortar. So bricks and mortar I'm not saying it's going to die because things will get better, but there will certainly be an adjustment in many cases away from bricks and mortar to online platforms and services. And also the issue is that there becomes it's more resilient, but also it's less capital intensive. So when it comes to cost, if I'm looking at an investment and I'm saying, in order for this person to run their business, they have to build bricks and mortar, pay rent every day, pay insurance on that facility, versus someone who's running a similar business, but is able to forego all those costs, which means more of my dollars can go into, say, permanent equipment in a sense of in a sense of your IT equipment, more resilient IT equipment, can go more into marketing, perhaps can go more into people to do sales and things like that. I'm probably going to divert my capital toward that because it's more efficient in regard to the delivery of the product. So that's where a lot of capital is going to go versus, you've had, the interesting thing about this crisis, it's like one CEO said recently, we couldn't anticipate it and we couldn't do anything about it. And we can't do anything about it. When I say can't do anything about it, in the sense of they can't just stop it, right? It's here and you have to deal with it. But what you can do about it is how you deal with it yourself. But the fact of the matter is there are retail outlets that are in a situation where I can only do but so much shifting. Yes, I am getting people to buy from my door. I'm getting pickup, we're doing the delivery. But you find that is best for those restaurants that are predominantly, this isn't affecting Domino's whatsoever, right? As long as you get people in to make the pizza, who cares? Because they were delivering before. But if your main appeal is that you are a sit-down, socialized restaurant, you have a bigger issue than the person who is, I run in there, grab a lunch, 15 minutes and walk out. I can still do the same. I call the guy up, tell him I'm coming, go online and pick up. It's waiting for me at the door. So those businesses that show an efficiency to not have to have bricks and mortar customers in the store are going to attract more capital than those who don't have that. Because people will look at every crisis and say, this can happen again. What position are you going to be in when it does?
Okay. So let's talk a little bit about, it's a good conversation to talk about the flow of capital. But what we do know is that there's some communities that capital just has not flowed into. Mm-hmm. There's populations that have a difficult time getting access to capital. And that was pre-COVID, during COVID. And so if we're looking at a vision, we know that there are some things that does not work for all people. Mm-hmm. So if we start talking about a vision, what can we look at to bring more equity and inclusion when we talk about this reflow of capital?
Well, here's my thought on this, and this is something that I and some other people are taking a look at right now. One, we have to look at what our needs are, and to me, it's a combination of, and this country has always been about this combination: economic need and policy. Those two things go hand in hand. If you leave one out without the other, you're likely to come up to some failure or come up against those who understand they go together. So you're basically fighting. You're in a boxing match with only one hand if you haven't put the two together. So let me give you an example. There is a need for one of the things that we found out in this crisis, particularly when it comes to the P2P program, that's those who had a long-term banking relationship were able to get access to capital first. Those who did not were running around trying to see which bank will take their application and who will get them first. And within a week, the first batch of money that Congress appropriated ran out. Then there's a second batch, and they're trying to get more. You have companies in a situation where they've been embarrassed, so they're sending money back. But the reality is, not having that relationship was damaging to certain communities, including ours. So one of the things I know of a group of businesses who are saying, wait a minute, the Black banks need assets. They need depository assets. We need better relationships with our bank so that when our needs come up, they're able to serve us. And part of that relationship, which is also human relationship, is, do they know you? Who are you? Do I understand what you do? Do I understand what your capital needs are on a regular basis? So that when you come and you need something, boom, I know who you are. Boom, I can take care of it. So they're looking at combining where they have multiple banks. Most of them are the large banks that you know about, Bank of America, JP Morgan, TD, whatever the case may be, and saying, let's look at a bank that wants to serve us and truly needs our business. And we can combine our assets and put it in that bank, which will be a Black bank, and then in response, say, look, we want to be some of your prime customers, right? So that when we have capital needs, you're able to provide them to us, where other banks are putting us last on the line, you'll put us first on the line. The difference between being a big fish in a small pond versus a small fish in a big pond. But ultimately, all relationships are best that are mutually beneficial. And this is the kind of relationship that will be mutually beneficial between Black businesses and Black banks. But also those banks, one of the things that's key to combine those assets, in other words, all targeting a particular bank, is that they have a good online capability, which goes back to what you were asking for earlier, them developing the online capability to be of service.
And how would one go about, I know you talked about in terms of maybe looking at some of the Black banks, how would businesses in general establish better relationships with any bank?
Well, I can give you an example. One is, banks are always looking for assets. Every branch manager or business development person has to show what they're offering to the business. In other words, why am I paying you? So they actually want to meet potential new customers because that helps them meet their monthly issue of what kind of deposits are you bringing into the bank. So doing it, if you're looking at bricks and mortar, then you can go right into a bank, speak to the branch manager, customer service, a lending officer, someone who has that responsibility, and say, hey, look, this is what I have. This is my business. I'm looking at doing the deposits here, but also here are my overall needs. This is how much money runs through my accounts every month. This is how much I deposit, what I keep on in savings. This is the kind of line of credit that I need, because banks make money on the fees on the lines of credit. So you're basically showing them, this is how I can help you by being a depositor in your bank. How can you help me? What kind of what kind of credit programs, what kind of services do you offer me? How much money do I need to deposit here in order to be a preferred customer, or get what they call like a personal banker? And then you compare banks. You shop, just like anything else. It's a competition. I'm looking at other banks. What can you offer me? But one of the other ways to do it is if you can go in with a group, because whatever your needs are, there are other small businesses that also have similar needs. And if you can say, we're all looking to put this, so now the depository amount goes up. It's like, oh, hey, we'd like to help you guys, because you're bringing them something that they need. People will always serve you better if you're bringing them something that they need. So for instance, you have an organization called the National Bankers Association, and they represent minority banks across the country. And they talk on a regular basis. And I happen to know an issue of them bringing, and they meet with the CEOs. The CEOs meet. So that could be a situation where if some group says we're looking for a black bank and we're going to combine our assets into that bank, they could go to the NBA, and the NBA could say, hey, I'm gonna bring what you have to the CEOs and see who's interested. So you're in a situation where you can say, hey, we're going to have these different banks looking for our business, and they will give us preferential treatment.
Now, does the cryptocurrency change these dynamics any?
No, I don't think crypto, and I know you mentioned that earlier, we didn't get to go into defining that, but it doesn't change the dynamics. I think the thing that I would mention is that cryptocurrencies are more a sign of innovation to pay attention to, more so than them being something that's going to, put everything, change everything, flip everything on its head. I think what we're dealing with now is we're witnessing an interesting, I don't know if it's maybe a convergence. So cryptocurrencies have been around for about 10 years, at least Bitcoin has been around for 10 years, sort of a niche thing. A lot of people investing in it, speculating on it, but it's sort of been a very niche thing. What I'm seeing now is that two things are happening. One, there's now a better regulatory environment. So everyone that was dealing with selling cryptocurrencies, buying cryptocurrencies, those companies, they're now facing, I'd say, a more stricter regulatory environment. They're now, anti-money laundering standards and other compliance standards that these companies have to be involved with. So that means that this sort of cryptocurrency industry, in many ways is getting more formalized. Now, it doesn't mean that necessarily that it's getting adopted, but it means that it's getting formalized. The other thing that's happening that we should pay attention to from a policy perspective is now banks or central banks are actually talking about, or at least they're researching the idea of creating central bank digital currencies. So a lot of this is discussion, basically without getting too much into details. It just means that now you have policymakers, you have the big banker, the central bankers, government and finance ministries thinking about ways to digitize their currencies and to come up with maybe even new methods of interacting with dispersing money through banks, right? So we're at this real interesting time within the pandemic where there are now policy questions about how do we make sure we infuse money to businesses and to everyday people. People are looking at new ways for more efficient payments. So all that goes to say is that we're witnessing a lot of financial innovation and or financial technology experimentation. Cryptocurrencies, just in case people want to know, I didn't define that, but just to give a synopsis definition, right? Cryptocurrency is basically, it's a virtual currency. It's a decentralized currency. It's a digital asset that's not backed by, the Fed. It's not backed by an asset necessarily. It's really code that's supposed to virtually represent value, and that you can transfer from from one to another, like a Bitcoin. So what does this mean for the future of banks? I would say that, nobody here can tell the future. No one has a, quote unquote crystal ball or anything. But for particularly, I think, small banks and even the big banks, financial institutions should be paying attention to these changes in payments. They should be thinking about the fact that, China is actually rolling out. They're digitizing their own currency. They should be thinking about the fact that we're probably going to be seeing some changes in how people transact. We're going to be seeing some changes in money. I can't say exactly how that's going to look like, but I would say, I'll end with this sort of anecdote, because I think we're in a moment similar to what we had, 20 or almost 30 years ago. I was a college student in the 90s, and I was in the Bay Area. I'm from California, and I was a student I graduated Berkeley in 1997. And the thing that I really reflect on is, when I was a college student, I was majoring in economics. I was next door to Silicon Valley. And I was very focused on economic development, on education, and sort of advancing the African-American community. And when I look back, I realized that I was right next door to this great new innovation that was happening, that revolutionized business, that revolutionized, the internet, that sort of changed everything. But I and most of my African-American colleagues, students, we were totally unaware of it. We didn't, maybe we got emails in college, but we were not sort of on the ground level involved with that innovation. So Google sprung up right next to us. And years later, we were like, wow, I didn't even know that was going on. And so I would say that there's a similar situation here. Not exactly the same, but there's a lot of innovation that's happening, and cryptocurrencies are just a part of that. And I think that we're going to have to be involved with that innovation. Even if it's not technically being a computer scientist, but being in the mix where you're aware of these innovations, and even that you're thinking about how these innovations maybe could be applied to our circumstances, how they could potentially provide solutions to the situations that we're dealing with. There's a company that I've been talking to called Emergency Impact, founded by young African Americans that are computer scientists. And they're creating this organization to try to come up with blockchain solutions. It's a technology that deals with cryptocurrencies, and to help humanitarian organizations and other social enterprises to help them with their mission. So take this technology that people are innovating and use it for, humanitarian assistance, for helping poor families, et cetera, et cetera. So we have to, I think, be in the mix of the innovation because this innovation is may impact the financial system and our way of doing business as the years progress.
I want to kind of focus in a little bit on this issue around inequities. And Jameel, from your perspective, what do you think drives the wealth inequity that we see here in America?
Oh, the same thing that has driven it since the existence of mankind. You can look at it as, you can use the evil term of greed, or you can use the term of self-survival. What do people care about? They care about themselves first, their families, say their clan, their tribe, and their nation. And then it becomes the rest of humanity. So what happens is, if I have the ability to access more resources than you do, if you look at it from the basic issue of an organism trying to survive, let's get down to the basic animal instinct. A cheetah makes a kill, the lions are bigger, they come take it, right? They don't care if it's fair or not. This is what they need to survive. I think most of what you're talking about, what creates these inequities, is just a basic desire to say, I have to make sure that I survive before I concern myself whether yours survive. Now, that's not what we call humane. It's better off if everybody survives. But people tend to think individually, singularly first. But what has happened is, in this country, is that it has become part of those survival tools or inequities have been also placed into policy. So you end up creating a situation that says we're not going to compete on an equal level. We're going to make sure that you cannot compete with it. So you never get, after slavery, which was obviously an issue of, which was all about economics. I need cheap labor. You know, now we call it shipping jobs overseas, right? But it was the same. It was the same incentive. I need cheap labor to increase on the profits of my production. After that, it was, okay, we're going to have policies in place that says you can't work here, you can't work there, you can't get educated here, you can't do this because I don't want you competing on the same plane as I do. When we make investments, we're going to put a situation in that says when we make investments in housing, you can't live here, you can't get these loans. But it all goes back to wanting to maintain that inequity that says I make sure me and mine survive. I'm not concerned as much about you and yours.
So how do we create that shift? And that's for either one of you. It's like we understand that this is something that's been happening since the beginning of time, and definitely when we look at the history of America, inequities were built into the Constitution of America. And so if we can't look to those that created the inequities to change the inequity. Mm-hmm. So how do we create that shift?
My initial opinion, just to say something really quickly, was first we have to identify what our needs are, identify the opportunities, work collectively toward the investment, but also identify those things to policymakers, support those in large numbers who are willing to agree to meet those needs, and then hold them accountable for making sure those policies are in place. And that would say would be like my 4 short steps to helping to change those inequities. It's easier said than done always, but I think I would say those are the 4 steps to changing those inequities.
And I would add to it, and I would probably frame things a little bit differently in terms of even the constitutional roots, because I would say that the inequities were not sort of infused into the Constitution. I would actually say that we had a situation that was lacking, but that actually, we stand on a strong basis that really the principles were one of equity, and so, but it just wasn't implemented in the right way. I would say that a solution is very an inward one. A lot of what I think even what Jameel pointed to is a natural process, right? It's not to say the sort of sense of survival is not evil or bad in itself, right? It's how we sort of implement it, because every organism has to survive. I actually would put the solution in really back to family. And the reason I say that is because if you think about it, a lot of this is just what happens naturally. When you naturally have a family, you naturally want it to survive. You want it to be safe and secure. You want to provide for it if you're the parent. You want it to grow. You want your children to be educated. You want to have peace. You want to have tranquility, and you want to progress. So once you have that, you actually have an environment where it's really natural to take care of your economic self-interest, to provide, and then more broadly for your community. It almost sort of just flourishes out from that, right? From you protecting your kids to having them grow, to living in peace, and to functioning and prosperous. One of our key issues is that part is broken. If you're not oriented around sort of a family security and a healthy family, you're not going to have what you need to sort of go out there and economically produce. So I would say that it really goes back to maybe a revamping of the philosophy of doing for self, and translating that into, becoming productive for your family, economically productive. Because the thing is, in our society, we have these inequities. All of it is not necessarily because this group over here, let's take one particular group, let's take a high income group like the Asian minority. It's not always that the group X, which is on top, is specifically trying to harm group B. A lot of times what's happening is group B is not doing certain things. So I put it on us. I actually put the onus on us to see that we're in a competitive environment. Nobody's going to do for us. No, there's never been in history in the world where one group really helped one whole group to come up. The group has to come up, has to come up itself. So I would just put that out there like that.
Okay, we're going to open up for some questions in a minute. The question that I want to throw out to both of you, or either one of you, is, given all of this, what do you think the significance of the stimulus checks that have gone out to individuals and families? What impact do you think that this may have on the economy, if any, and what impact does it have on kind of the psychosocial dynamics?
You want to go, Jameel?
How about that? I saw the last one. You want to start this one?
Yeah. Okay. So I'll make mine real quick. I'll just no. So I will say short term versus long term. My concern is that what we're talking about with the economic impact payments, the stimulus, is you're addressing an economic crisis in the short term, which we have to, which is how can people survive? I know there are going to be issues. Maybe we can get into that in terms of how it's been dispersed, and Jameel, I think, pointed to that. But even with that, that's not touching on the long-term effects, the long-term impact, right? At the end of the day, we're going to have to get past survival. And when we do, there's still going to be questions about, well, who is going to function or who is going to flourish in this environment when we have these new economic shifts, when we have the new environment. So the economic stimulus, I would say, is not dealing with the long term. And that's where us communities, we're going to have to figure out how do we address the long term. It's not going to come from $1,200, $1,700 in the short term.
I would agree. 70%, the economic stimulus checks are meant to be just that, to be a shot in the arm to the economy, because 70% of the U.S. economy is consumer spending. So the point was to put money into the hands of consumers, so hopefully they'll go out and spend. Of course, part of the problem that it has in this particular economy, because of where we are, is that there are places where you can't spend it, right? And so if my store is closed, you could give everybody in my neighborhood $1 million. I get zero, right? So it doesn't have the same kind of an effect as it might have had, say, after the 2008 financial crisis. But it's meant to say, well, maybe people can hold on for a little while longer because we don't know how long this is going to last. But the other issue, but the problem is that kind of stimulus, not necessarily giving everybody $1,000, but too often when we do tax policy in the United States, it's always looked at, it ultimately comes down to the people on the bottom get a little something to make themselves feel better. The people on the top get a whole lot of stuff, right? And so you do the 2017 Tax Act, and somebody say, hey, every family is going to get $1,000. You know how quick $1,000 goes if you have a family? But if you're in the 1%, your tax break came out to like 10 million or something to that effect. But it doesn't really help the economy because people of wealth already are able to spend all the money that they need as a consumer when they need it. That's the benefit of having wealth. But if you shift more money toward the lower end, they will spend like, the marginal propensity to spend, I haven't looked at the numbers lately, like 85% or something to that effect. But the lower you go, the higher that percentage is. You give to someone who's in the blue collar working, they're going to spend every dollar that you give them. You go to the middle class, they're going to spend 80, maybe they'll put 20 aside, and so on and so forth. So if you want to give the economy's long-term boost, you have to shift more money to the lower end. So it benefits businesses because they get more customers, you get more consumer spending, you create more jobs, and it becomes a cycle. I also was a econ major
All right. So I'll ask Erica to look and see whether or not we have any questions. But before I do that, I just want to, there's a few things. I think this conversation could have spun off into a lot of different directions. And I'd like to just kind of think about where we may have some future conversations. And listening to what I heard today, one of the things that came to mind for me is more of a quote coming out of the Quran, which is, "I will not change the condition of a people until they change what is in themselves." And so I'd like for us to just look at being able to have this conversation in another episode to talk about how do we begin to address what's in ourselves to be able to change the conditions that we find ourselves in, where we're having these discussions around inequities. And so I'd like for you to think about that, and for us to think about who else might be able to join that profound conversation as we start to think about this vision in this new post-pandemic world. And on that note, I'll ask Erica, do we have any questions lined up?
Yes, we do have a question for the panelists. What are the recommendations for businesses for establishing relationships with banks and finance institutions? And post-COVID-19, will it be any simpler to establish these ties?
Banks are always looking for business, whether they're online banks. But so let me go in a slightly different direction. I'm not here to do advertisement, but there is a black banker came out of J.P. Morgan who is really looking at the needs of underserved communities and how they can get them out of being the unbanked to being banked by offering them various services. A lot of it will be online. Even though there is a banking relationship underneath it where the deposits ultimately go, but it ends up being much lower cost. So I think, one of the numbers he gave me was you save something like, several $1,000s a year just on banking costs. Like, for instance, I remember when I left, one of the big banks and went to the credit union, changed jobs some years back. And I automatically started saving $300 a year just on maintenance fees. But I think that one of the issues, if you're a small business, everybody wants to go to the big bank, right? But the reality is sometimes the small regional bank, the local bank, the community bank is going to appreciate your business more and may give you more attention. And I think particularly as we look at the African-American community, we have to consider that we have to come up together. So if you're saying, well, I looked at some of these black banks, but they can't offer me everything that, there are 5 huge banks in the United States, right? They can't offer me everything that wasn't can offer me. Well, there are majority companies that when you go to offer their service, your service as a business, say, well, you can't offer me what, big service company can offer me. And your mindset is, well, give me a chance. Well, you have to give these banks a chance too, so that we can build our community together. But you can also demand from them certain levels of service and individual attention that ultimately may suit you better, because you will be first in line, or maybe somewhere near the front of the line with a small bank than you will be with a large bank. And depending upon what kind of assets you have to offer, and that's why I go back to the cooperative, maybe coming in with other businesses, because then you can shoot right up to the top of the bank when we talk about establishing a relationship and get, the senior vice president, the executive vice president, or even the CEO, because the assets that you're bringing in are large enough to get their attention. It's going to take a whole lot of black banks to get the attention of, say, Jamie Dimon or something to that effect. I mean, a lot of black businesses. What do we have to get the direct attention of, say, Jamie Dimon, right? But for, maybe for a harbor, or for an industrial, or for a, One United Bank, you can get more direct attention.
Um, Jameel, if you could maybe supply us with any kind of links that could help people find those banks, and we can add that to our website underneath this episode.
Certainly I could.
Thank you. I see that there is a question from Andre. And Andrea, Erica, do you see that question?
Yes, I do. Yes. Yes. Andre's question is, how can we get the inefficiency of racial policy as it relates to systematic marginalization of Black people viewed as a risk factor to the full recovery of the economy?
That's a big question.
Yep.
A philosophical question, right?
That's a big question, I'm sure. And we'd have to pick that apart. There's an assumption there. There's an assumption that you can change. There's an assumption that you're actually going to be able to change some of that. I have maybe different perspective. I have a perspective that we have to focus on what Sister Linda had just mentioned, right? In terms of what can we do to change ourselves, and that's not to negate the environment. But if I go back to, again, our history of do for self, right? We actually faced worse circumstances, in the decades past. And we had to develop a spirit of, okay, we're going to get up. We're going to rise out of this situation. We shall overcome. And we have to keep that spirit. I think there's a little bit too much, in my mind, emphasis on, okay, change the outside, please someone change the outside circumstances so that we can come up. And I think we have to have that spirit of do for self, which is, I translate it as saying, being economically productive, advancing, taking the best out of the situation and rising above, which we did when we were, up from slavery, when we were coming out of slavery. So I know I'm not answering Andre's question. I'm just providing a different tack on it.
I would want to add, one thing to that, because I agree with him in the self, do for self thing. Sometimes people think that's the debate between the left and the right, the progressive and the conservative. But it's really not, because the reality is there's only one person in this life whose actions you can control, and that is your own. And sometimes you have to accept that somebody else, unless they come to you and say they feel differently, you have to accept the fact that somebody else doesn't necessarily have your best interest in mind. So acknowledging that, then it becomes, if you're in the ring, you've got to assume the other person's there to knock you out, right? So you better defend yourself and then take the offense to do the same, which means preparing yourself for the fight, using your best strategy, and then going there and planning to win. So it becomes, who else is like-minded with you in your same circumstance, and how can you work together to pull each other into a better circumstance? Because it's like they say, power succeeds nothing without demand. People aren't just going to say, hey, you know what? We should do the right thing for those people. No, that's not going to happen. It has to come to the point of, look, this is what I've got, and if you want any of it, here's what I have to have, negotiation. Or I don't need you at all, so I'm taking what I need. We just can't depend on others to suddenly change the paradigm. We have to change it for ourselves.
Right. I know we are a little past 2, and I want to make sure I get my thank yous in. So acknowledge our 2 profound conversationalists, and thank you both for joining us today, and also for Erica Christie, who is our engineer, and she does a lot of the post-production work related to the podcast for this, and of course my business partners, Kareem Ali and Samuel Sharif, for all the hard work that they do also to support these episodes. And we started out today with the quote saying from Helen Keller, "The only thing worse than being blind is having sight and no vision." So as we develop our economic development series of Profound Conversations, we will be looking at these questions and saying, how do we develop a new vision? Thank you very much for joining us for this episode of Profound Conversations.
Thank you, Linda.
Thank you
Thank
very
you,
much.
Erica.